will continue Unit 2, Chapter 4, Introduction to Financial Market. In last videos, we discussed meaning and definition of financial market, scope of Indian financial market, types of financial market, and then role of financial market. Now, we'll discuss functions of financial market. Financial market function is classified into two. One is intermediary function, another one is financial function. Intermediary function: transfer of resources, enhancing income, productive usage, capital formation, price determination, sale mechanism, information. Now we'll start intermediary function. We'll discuss one by one. Transfer of resources. Financial market facilitate the transfer of real economic resource from lenders to ultimate borrowers. Enhancing income. Financial market allow lenders earn interest or dividend on their surplus investable funds and thus contributing to the enhancement of the individual and the national income. Productive usage. Financial market allow for the productive use of the funds borrowed and thus enhancing the income and the gross national production. Capital formation. Financial market provides a channel through which new savings flow to aid capital formation of a country. Price determination. Financial market allow for the determination of the price of the traded financial asset through the interaction of buyers and sellers. They provide a signal for the allocation of funds in the economy based on the demand and supply through the mechanism called price discovery process. Sale mechanism. Financial market provides a mechanism for selling of a financial asset by an investors so as to offer the benefits of marketability and liquidity of such assets. Information. The activities of the participants in the financial market result in generation and the consequent dissemination of information to the various segments of the market so as to reduce the cost of transaction of financial asset. Financial function. Number 1. Providing the borrowers with funds so as to enable them to carry out their investments plans. Providing the lenders with earning asset so as to enable them to earn wealth by deploying the asset in productive venture. Number 3. Providing liquidity in the market so as to facilitate trading of funds. Next is new issue market versus secondary market. Meaning: new issue market. The marketplace for new shares is called primary market, that is initial issue market. Secondary market. The place where formally issued securities are traded is known as secondary market, that is resale market, which means we can buy the shares directly from that issuers. In secondary market, we can buy from that market, not direct by the companies. Buying. New issue market we can buy directly. In secondary market, indirect because we can buy the shares from the market. Financing. It supplies fund to building enterprise and also to existing companies for expansion and diversification. It does not provide funding to companies. How can securities be sold? In new issue market only once. In secondary market multiple times. Buying and selling between. New issue market company and investors. Secondary market investors. Gained person. New issue market company. Secondary market investors. Then intermediary. New issue market underwriters. In secondary market brokers. Price in new issue market, that is fixed price. Secondary market fluctuate depends on demand and supply force, which means it will increase or decrease depends upon that demand. Organizational difference. Not rooted to any specific spot or geographical location. Secondary market. It has physical existence. Classification of financial asset. Financial assets can be classified differently under different circumstances. Here we are going to discuss two classification. One is marketable asset, another one is non-marketable asset. Marketable asset. Marketable assets are those which can be easily transferred from one person to another without much hindrances. Example, shares of listed companies, government securities, bonds of public sector undertakings, etc. Next one is non-marketable assets. On the other hand, if the assets cannot be transferred easily, they come under this category. Example, bank deposits, provident funds, pension funds, national savings certificates, insurance policies, etc. This classification is shown in the following chart. Now we'll recall the lesson. Financial market. Components of organized sector. Organized sector consists of regulators, financial institution, financial market and financial services. Financial market. A market wherein financial instruments such as financial claims, assets and securities are traded is known as a financial market. Equity market. Equity market is a financial market for trading in equity share of companies. Debt market. Debt market is a financial market for trading in debt instrument, that is government bonds or securities, corporate debentures or bonds. Spot market. Spot market is a market where the delivery of the financial instrument and payment of cash occurs immediately. Future market. Spot market is also known as the cash market, but future market is also known as forward market. Secondary market. Secondary market may be defined as the market for old securities in the sense that securities which are previously issued in the primary market are traded here. The trading takes place between investors who follow the original issue in the primary market. It covers both stock exchange and over-the-counter market. Scope of financial market. The financial market provides financial assistance to individual, agriculture sector, industrial sector, service sector, financial institutions like a bank, insurance sector, provident funds and the government as a whole. Through the financial market, the institutions get their short-term as well as long-term financial assistance. It leads to the overall economic development.